All right, here we are. Hey, thanks for joining us this morning. I'm Anthony Parent of IRSMedic, and today we're going to be talking about kind of an interesting thing, a very interesting thing, Section 891 of the Internal Revenue Code. And I would say it's so incredibly surprising, the powers that the U.S. federal government has via taxing. And we should never be surprised what the government can do via taxation. I do want to introduce my guests. We have John Richardson, the great John Richardson, here joining us today, along with Keith Redmond. And Keith has been out of action a little bit here, and he just has a couple things he wants to address everyone too. So Keith, welcome to the show. And what's going on here, my man? Oh, I love the birds.
Yeah,
I love the birdies. The birdies?
Yeah, I got the birdies going on. Yeah. I know a number of people have been asking me where I've been, and I thought I'd just mention it, that I'm not going to be able to stay on the podcast. Unfortunately, I'm dealing with end-of-life issues with my father, and so that's been taking me away. And hopefully maybe next week I'll be able to kind of reconnect with the team, with you guys, and move forward. But right now, I'm needed elsewhere. But that certainly doesn't preclude people who need to reach out to me through the American Expatriates for Residency-Based Taxation group on Facebook, or through my email address that you'll put up, Anthony.
Yep.
If they do need to set up some time, just be patient with me as far as scheduling, but happy to do so. But just wanted to let people know that I'm still around, but just out of pocket for the moment.
Right. And there's Keith's email if you want to get in touch with him, and also if you want to join his Facebook group, there it is. There's a link to it as well. All right, well, Keith, that's rough news. I'm sorry about it, my man. Let's see what you can do the best. And we got a nice little God bless you, Keith. Thank you, Tommy. Thank you very much. Keith is a great guy, and he gives a lot of himself to educate people about the tyranny that we're underneath. He really does give a lot of himself. I want to thank him so much for this. And Keith is really, supposed to be living in France, but he's, tackling the real life issue of
elderly parents. Yeah.
It's a big thing.
Yeah, so keep your father in my prayers, and I'm going to get going.
All right, great. All right,
All
Keith,
right.
Thanks so much.
All right.
Next
Take
time.
care. Bye-bye.
Bye. All right. So all right. So John, awful, tough thing for Keith there. So this is such an interesting topic, John, that we're going to talk about today. And hopefully Keith will be able to watch it on replay so he can comment, because this is where I'm at, John. We have so much news happening in tax world, and the things that Donald Trump has said about just ending the IRS altogether. And there's so much going on, it's hard to keep track of it. So when I saw this is an area of law that I'm not familiar with here, and I'm going to pop it up on my screen so people know what we're talking about. Let me go here. This is the thing that I find incredible. Here it is. This is what we're going to be talking about today. John, this is crazy. Doubling of rates of tax on citizens and corporations of certain foreign countries. This is shocking that the federal government has this kind of power. That was my first inclination here. My first reaction was like, what? They could do this. And then I didn't say, well, how does this work exactly? And who pays the price? So those are the questions that I had, John. Do you think we'll be able to get to those?
I presume so. This is a topic. Well, this particular section of the Internal Revenue Code is, in my opinion, that certain people have been sort of peripherally aware of, for a number of years, but have never thought about particularly. But it's very, very clear that if you look at the executive orders coming out, scroll down a little bit, you'll notice that in the second line, just stop there. Whenever the president finds under the laws of any foreign country, pause there, citizens or corporations of the United States are being subjected to discriminatory or extraterritorial taxes. Now let's pause there for a minute, okay? Notice the language, discriminatory. Okay. I think I might be able to recognize that if I saw it. Hard to define, though. Extraterritorial. In other words, if they were to impose citizenship taxation. Okay.
Right. We can do it, but you can't do it.
Oh, exactly. To some extent, as Laura Snyder of C wrote a great article on this called do what I say, not what I do. I mean, at one point I thought that the title should probably be only the United States can impose extraterritorial taxation. But yeah, I mean, it's unbelievable hypocrisy. Now that said, this has been in the Internal Revenue Code since like 1955. Also, I noticed that the impetus for this appears to be something to do with life insurance. Okay, so this is another example. So I'm guessing that something was going on in the life insurance industry, so they put this up. But of course, once these statutes get on the books, who knows, where they may go. But reading the first sentence again, right? Whenever the president finds that, okay, what the hell is that supposed to mean? Does that mean President Trump dreams it? Does that mean somebody tweeted it and he retweeted it? Would that mean the Treasury Secretary said, "Hey, can I talk to you after work and go for a beer?" It's hard to know what that means, right? Under the laws, notice it says any foreign country. Notice also it says citizens or corporations are being subjected to discriminatory. Notice that would not include green card holders, etc. Interestingly, okay? But here's something that I think the commentators, without exception, are missing on this. Because when I see stuff written, they say, well, the president may do this. Oh, not so. Let's look at this language. The president shall proclaim. Got it? Shall. In other words, the president has no option, right?
Yeah, he has to do it.
Has to do it under the statute, and there's no other reasonable reading of this. I mean, that is mandatory language, my friend, mandatory language. Okay, but continue, but that doesn't seem to be picked up in the commentary. Shall so proclaim, and the rates of tax imposed. Now, I want you to notice, okay, that the sections of the Internal Revenue include both Section 1 and 871. Now, 1 is just the general, everybody subject to our tax jurisdiction. Okay, and 871, I think, is just the non-resident alien thing, right? But the point is that this is really broad, okay, really broad. And, as an interesting article by somebody named Catherine Rempel in the Washington Post talking about this last week pointed out, that, if we look at that, shall impose, double in the case of each citizen and corporation of such foreign country. So a Canada-U.S. Dual citizen, right, living in the United States would have to be subjected to this double tax, wouldn't they?
Yes, correct.
I mean, there's nothing about being a dual citizen that makes you not a citizen of another country, right? In fact, that's the whole point. So, I mean, this is absolutely extraordinarily broad. And then, when I thought about this a little bit, well, I mean, how does this get implemented? There are no Treasury regulations, at least I didn't see any. So maybe what Treasury does is writes regulations under their general authority to write regulations. And perhaps they write, well, basically tax police need to go door to door to root out citizens of other countries. Find them, right? Is there or has there ever been anybody in this house who's a citizen of another country? Okay. I mean, this is incredibly dangerous. I think that it should be abolished, period, because the actual reading of this is extraordinary in its breadth and depravity. The good news, of course, is that the maximum tax rate can be only 80%. Now hold on a minute, Anthony.
Right, okay, right. There it is. Right,
But Anthony, when this was written in the 50s, I think the top tax rate was like 90%.
90%, right? It was 90%,
right. Don't forget.
Yep.
At the time they were probably cut a bit of a break here, right? Now, so why is this in the news? Lately, all of a sudden, right? Well, if you look at the Trump executive orders, go back to line 2 of the statute, right, where it says discriminatory or extraterritorial. You'll notice that those executive orders all use that exact language. Okay, so the Trump executive order this week and whatever, they're talking about having the Treasury Secretary, sort of scour the world to look for discriminatory or extraterritorial taxes imposed on U.S. citizens or corporations. So, I mean, that's no accident. That's no accident. What they're trying to do, it seems to me, is make it so the president can finds that, wherever the president finds that, right? The result of this would be, oh, really? So now we know the president finds that, right? And that would be the trigger for, in my view, I mean, if they're in fact going to obey the law, it's a mandatory imposition. Okay, I don't get where people, all the comments says, the president may do this as though it's discretionary.
Yeah, yeah.
Are you reading this?
Yeah.
Yeah, I mean, that's awfully powerful language. The difference between shall and may, and to the extent that the commentary on this says may, maybe they know something I don't, whatever, but I think they're flat out wrong. Okay, so we have a statute here that is, absolutely extraordinary in its depravity. Okay, and maybe we can pause here, but I think it might be useful to talk about the context. What is it that has all of a sudden got their interest on this? Maybe we can do that in a minute. But what are your comments on my commentary on this?
John, I'm stunned here. I'm honestly stunned because as I'm going through, it's like, wait a second. So if Canada, let's just use that as an example, imposes a discriminatory or extraterritorial tax on a U.S. person in Canada, someone who's a U.S. person, okay, then the solution is that their U.S. taxes will be increased double?
Well, I read it as imposed on a U.S. person or corporation anywhere.
Right. Okay. So if you are a U.S. person or corporation who's subject to unfair discriminatory taxation, the U.S. government's on your side. They're going to go and double your tax rates.
No, they're going to go and double the tax rates of the person or entity that's imposing the discriminatory or extraterritorial taxation on you.
So we're going to tax Canada?
Well, I don't know. This is an interesting question. Maybe why don't we pause and come back to that? But let's look at the context, because if we look at the context, maybe we can.
Yeah, maybe that will get it. Yeah, and I do think and just to your point earlier, what you said about that this was something pushed by the insurance lobby. It would make total sense why they got it in. Insurance lobby is super powerful, and look, I mean, U.S. life insurance policies are one of the greatest tax shelters around. Private placement life insurance is probably the number one legal way to avoid not paying any taxes.
Was that true in 1955, Anthony? Remember that all, I mean, I don't know the answer, and actually, I don't think you were even born in 1955.
No, I wasn't.
Actually, I wasn't either.
Yeah, you weren't either, right?
But I mean, the point here is that, that we have a law that is created, I mean, I think it would be interesting if you look at the legislative history of this. Scroll down. I think we might see something here. Okay, it's not here, but I saw, if you were to go to the original 1954 and click on that state, don't do it.
Yeah, I won't do it. Yeah,
we do, but it had something to do with insurance in any case, right? So yeah. I don't know what was going on then, obviously, but it does seem to me that this is one more law that was enacted and is now staying on the books and is being, I think, I wouldn't even say reinterpreted. I would say being interpreted as though it's a tabula rasa 70 years later in 2025, right? I mean, it reminds me, I'm not saying it's a direct analogy, but it reminds me of, what's that law they used to go after Julian Assange, that 1917 law?
Oh,
whatever it was. I mean, the point is that they, they dust these things off, right? Use them for things they were ever intended to. But okay,
John, it's like Rip Van Winkle. This law passed in 1954 and then went to sleep and didn't wake up until 2025. That's what we have. And crazy that there's no regulations behind it either. Crazy. Kind of like, wow.
Well, it is certainly interesting. And, it seems to me that this may have been a shot across the bow, okay, towards foreign countries, that we're trying to impose some kind of tax on, U.S. insurance companies. I don't know. I mean, that's just my guess, right? and then nothing came of it. So of course, it just sits there, right? So, there we have. I mean, I don't see a way to really read it narrowly. Okay. And if we read it expansively, I mean, it would go so far as to say that if Canada, we'll talk about the digital services tax in a minute, which the U.S. regards as discriminatory. We'll get to that in a minute, and why I think the U.S. is wrong. But in any case, okay. They don't have.
John, I guess, John, I'm still hung up on this here. When we get to, well, who's going to pay the tax when it's doubled? Okay, this requires, this requires
the Canadian citizen of the United States pays the tax.
The Canadian
or
citizen.
A Canadian citizen taxable on U.S. source income would pay the tax. Right. Anybody who's subject to U.S. taxation would have their taxes doubled. Right.
Right.
So let's say, all right, that we have, and we'll describe this a little better in a minute, but let's say that President Trump decides that President Trump finds that, right? So imagine that we have a new executive order that says, last night, President Trump, finds that, okay, just to make sure it's absolutely accurate. Okay, then under Canada's law of digital services tax, okay, U.S. corporations, like say Microsoft or Meta or whatever it's called, are being subjected to discriminatory taxes. Okay, all right, I've made this finding. I am now required by law to proclaim that the rates of tax imposed on are going to be double in the case of each citizen or corporation of Canada, right? So any Canadian citizen or corporation that's subject to U.S. tax appears to be required to be subject to double taxation. So that would include, let's take somebody. Here's a very, very common situation. Some Canadian moves to the United States because of marriage or whatever. They're living in a nice suburb, middle class lifestyle. They have Canadian citizenship. Okay, married to an American. The tax police come to the door and say, we got any citizens of any foreign countries living here? And she says, yeah, I'm a Canadian. There's something wrong with that? And then they say, well, not really, except that you're not subject to double taxation in the United States because your government, the government of Canada, is imposing discriminatory taxes on Facebook. Right? So, I think that's what it means.
Oh my! Well, I guess why would it mean that?
Well, it says it. Let's
right. I guess it's like whenever so because like I'm perhaps reading this way too narrowly. That I got to look at this like, okay, look, whenever the president finds that under the laws of any foreign country, citizens or corporations are being subject to discriminatory taxes, the president can double the tax rates.
Well, but who are they doubling the tax rates on?
Right, and I think that to me it looks like they're doubling it on the individual or corporation.
No,
I
don't think. Well, maybe you're right. I don't know. Look,
right.
I don't know what the hell this means, Anthony. I'm just trying to figure this out.
We're just simple, humble lawyers, right?
Let's go through it very, very.
Yeah, let's go. All right, let's continue.
Let's check it off every step of the way. Go back to the top, okay?
All right.
Now we're going to go slowly, and we're going to check every step of the way. Ready?
Yep.
President Trump says. And he's really clear. He says, President Trump, finds that. So there's no ambiguity. That's the language he uses. I finds that.
Yep.
Under the law of Canada, Meta, by being subject to Canada's digital service tax, is subjected to discriminatory taxes under Canadian law. I shall now proclaim that the rates of tax be doubled for every citizen and corporation of Canada. Every citizen or corporation. Every one of them. So the Democrats all of a sudden love Trump and they say, oh my God, good, let's go door to door and find dual citizens. Remember how Ron Wyden hates dual citizens? Remember that? Dual citizen is a way of tax evasion. Now he says, well, now we're going to go door to door to find dual citizens.
But it's like, but okay. So John, here's my question though: as we go through this, right? Double the tax. Well, who's paying a tax rate to begin with? Like, well, you're going to double the tax rate of who? And if you're going to double
anybody,
the tax rate,
anybody is subject to taxation under sections 1, 3, 11, 801, 831, 852, 871, and 881.
So those are going to be the individuals.
That's exactly right. And this is the problem of taking some bullshit law that was designed for no purpose but to punish, putting it to sleep for 70 years.
Oh my God.
Busting it off. I mean, this is what the damn thing says. Okay. Now I would expect, all the defenders of this say, oh, John, no, it doesn't, you're crazy. Well, maybe, but tell me why. I'll go through it with you again, Anthony. I mean, just reading the damn.
Well, no, and then this puts it into context. She was like, hey, well, look, we're going to double your rate, but we're going to keep it. You can't go over 80%.
Well, that was a gift in 1955 where taxes were.
Yeah, right. Yeah. But I mean, is it? I mean, this is. I'm so confused here. Wait a second. So the only people you could double the taxes on are people who are already paying taxes, the corporations and U.S. persons. You can't double the taxes of somebody who doesn't have a tax whatsoever.
Yeah, people who are subject to U.S. tax. I think. Look, I don't know. I don't have unlimited time to do this stuff, right? So I looked at. I know Section 1. I know Section 871. I'm not sure what the rest of the stuff's talking about. I don't really care because the point is that by including Section 1 and 871, okay, you're including people who are subject to U.S. taxation.
That's right, yeah.
That's all I need to know here. I don't care what the rest of it says. So, I mean, this is actually what it means, okay? This is not, okay, a question of, somehow randomly targeting at all. This is a question of a mandatory requirement to target all citizens and Canadian corporations who are subject to U.S. taxation, either because they're U.S. tax residents or because they have U.S. source income.
This is crazy. This is now the way it would work, I would assume, is that we would have. Hold on a second. Here we go. Well, I should be back at it. So the way it would work, John, this is what I would assume, is that, hey, look, your U.S. tax rate's doubled. So now you have a bigger foreign tax credit. So Canada, you get less, more comes to the U.S.
No. Well, maybe, but not necessarily. Let's look at it this way. Let's take, now who does this apply to? Well, it would apply to, a Canadian corporation with U.S. source income, presumably, so their taxes would be doubled. So to the extent, okay, that increased U.S. taxes, then presumably that would increase a foreign tax credit against Canadian taxes, right? So maybe people are paying less to Canada, but I would point out that, that by doubling the U.S. tax, it may well be that people are paying more taxes overall as well, right? I mean, if you have a situation where the U.S. tax is at 20%, Canada tax is at 25%, all of a sudden the U.S. tax is at 40%. Well, now we've got a situation where your overall taxes have increased by 40 less 25, 15%. But if we have a situation where, again, we'll use Canada 25, U.S. 20, and let's say the U.S. only goes up to 22%, then we have a situation where the U.S. takes 2% more taxes, reducing the amount that can be used as a tax credit against Canada. So essentially, either way, what the U.S. is doing is basically stealing tax revenue from Canada, right? On its own citizens or residents.
Well, and then John, this part right here is getting me to really question mark here. Or extraterritorial taxations. Now, while there's no country in the world that taxes people based on their citizenship, if you live in a country, you typically
Anthony, there are extraterritorial taxes contemplated by the new international tax regime. So I think we need to talk about that as well. It's also a shot across the bow of the Pillar 2 undertax profit rules. Okay, we're already probably way beyond where we should be in complexity. okay, on this. Okay.
Well, no, and I would think too. It's like, look, right now, President of the United States can implement this pretty much anywhere on most countries, because most countries will tax U.S. persons on extraterritorial taxes.
Well, okay. Let's pause for a minute. I think this is getting way too theoretical.
Okay.
Look, this is hard.
Yeah.
Let's talk about the new pillar, the pillar one of
Okay.
pillar.
All right. We'll use an example. Okay.
Close our eyes and just talk about what's going on in the world today. Okay.
Okay. Yep.
All right. So here's what's happening in the world. As you point out at the beginning of almost every podcast now, that taxation is a huge topic. In fact, there's so much going on that you don't even know what to talk about anymore.
I don't even know what. Yeah, I can't keep up.
I mean, it's so upsetting. But and that's true, domestically in the U.S., it's true domestically in Canada. But other than in big four accounting firms and that, there's very little discussion of what's going on in the rules of international tax. Now, international tax is different from international aspects of U.S. tax. International tax are the rules that countries use among them, to deal with these tax issues. Now, now I want to break this discussion down in two ways, because I want to explain this in terms of how the U.S. would see digital services tax, and I want to explain how they would see this in terms of Pillar 2. So it's the tax treaties, right? These international tax treaties that govern this. Now, Anthony, these tax treaties are 100 years old. Okay, like I'm not kidding. The rules of international tax are based on a world that no longer exists, 100 years old. They were based on rules where, the great powers of the day, Britain, the United States, France, what have you, were exporters of capital. Now, what the hell does that mean? It means that U.S. mining companies would go to other countries, like say India, although I don't think it was a mining destination, but you get my point, right? They go to these developing countries and they export capital and they invest a lot of money, to mine. And sure, they employ locals to do the dirty work, right? And they do pay them. But these, the companies of these great powers, they go around the world, basically pillaging natural resources, right? And this still goes on today. In fact, Canadian corporations are apparently some of the number one pillagers in the world, okay, on this. The mining industry in Canada is very big, and I don't know anything about it beyond the fact that it's very big, although I know lots of people who do know about it. All right, now, so ask yourself this question 100 years ago. So a company can go in and make a lot of money by, installing a mining operation in, say, Africa. Okay, lots of mining in Africa. The question is, who should get the profits from that, right? In other words, should the profits belong solely to the company? Or should the company, or should the country that's essentially providing the labor and the infrastructure for those people to live, should the country get some of the profits? Should they be split? I'd be interested in your reaction to that. Let's just pause here for a minute.
Oh, my reaction to that? Who should get the profits? Well, I mean, the way it works.
No. Stop. I want to know what you think would be reasonable. Forget the way it works. We'll get to that in a minute.
Okay, so would it be reasonable to say that, hey, look, this big corporation is only possible because of the mothership country doing it? Well, the mothership country makes it all possible.
Okay.
So if that's,
but on the other hand, but remember also, add to that though, that the country where the mine is going on, I mean, they've educated these citizens, they pay for them, right? They've essentially made the workforce possible, haven't they? Yeah. So, I mean, I'm just interested in your view. Now, what you think the answer is? Do you think that in the case, let's start off with a case 100 years ago of, let's use Union Carbide in India. Okay, I mean, this is an example from the 80s. We all remember, maybe you remember.
Well, not everybody. Let me give you, in the 80s, Union Carbide had a terrible, awful, deadly spill.
Well, they did, but here's the thing, right? So if let's say we have Union Carbide India, and they're doing something in India with Indian people labor, right? Now, the question is, let's say that by virtue of this investment in India, Union Carbide makes $100 million. Who should have taxing rights to that $100 million? Should the government of India be able to tax part of it? Should the government of the United States? How should that $100 million be divvied up? Or should it be divvied up? Should the U.S. get it all? Should India get it all? I'm just curious what you think.
I mean, you put me on the spot. I love it. Thank you, John. I would say, because it's totally allowable, part of it would be totally allowable if we just take the United States government for what it is. It's an empire. So what you're just telling me is like, hey, look, if you have so your question could also be rephrased as, hey, look, our empire's allowed to do whatever they want to do. Well, the answer is like, yeah, because they have the power.
Well, okay, we understand that, but I'm just saying, let's say you're sitting down and, you're tasked with, that we want to get a just, reasonable allocation of this $100 million. Who should get it? Should they share it? Should one get it all? Should the other? I mean, what do you think of? I just want to know what you think. Not right. We know what the United States would think.
You're right. All right. So what I would think in this case, and here's my reason why, is that all of those profits should go to the country of India, and the reason why is that all of the risk of the limited liability entity that is operating in India is borne by the Indian people. That is, hey, look, when they do something really mean and nasty to the environment, the United States does not have to foot the bill to clean it up, but rather, if this limited liability entity that exists because of Indian law, I would say under a social contract theory, something like that, that the profits should go to India because India is providing the limited liability entity. And so there's my answer.
You know what, Anthony? I think that's totally rational. Okay. But I mean, the point is what you're saying is that you think that the government of India ought to have taxing rights to at least some or all of that $100 million, right? That's what you're saying for whatever reason. Okay. Now, the president of a company, I don't know specifically Union Carbide, but a U.S. multinational, right, would probably respond to that by saying, what do you think they might say?
A U.S. national or the
Well, the president of a U.S. multinational, what do you think they would say? Let me answer that. They say they don't give a goddamn. They just want clarity on the rules because of the foreign tax credit rules. I think that's what they would probably say. But the United States, in trying to justify it taking the whole thing, would say, well, the U.S. multinational is exporting the capital, right? It's our capital that's doing this, that's making it possible. Now, that's 100 years ago. Now, let's park that scenario a minute ago. 100 years ago, British, American, French companies exporting capital to developing countries, say Africa or something, right? Okay, which is fairly common. So let me tell you now what the standard tax treaty of 100 years ago says on this, okay? I'm not saying this is fair or just. I'm just saying, we're going to move into what the damn thing says. The OECD tax treaty. What it says, and this isn't the exact wording, but it says that as long as, I'm going to say U.S., even though I mean British, French, Dutch, what have you, as long as the U.S. company does not have a permanent establishment in the African company, then are you ready for this? The African company cannot tax the profits. All the profits can be taxed only by the United States, okay? Now I'm going to say that again. As long as the multinational does not have a permanent establishment, let's not get into what that means, because once we have that, there's always a way to avoid it, right? Unless there's a permanent establishment in the African company, then the United States, which is the home of the multinational, has the right to tax all of the 100 million. Okay, that's what's called the permanent establishment clause. This is in the OECD tax treaties, the US tax treaties. We'll talk about the UN tax treaties in a minute. But the point is that this has been the law for 100 years, international tax law. Are you with me?
Mm-hmm.
All right. Now, let's go forward 100 years. Now, remember the rationale for this, okay? I think it was just bullying at the time, right? As always. It's always about bullying. But the rationale I think there was more of a rationale then because there was, a lot of capital required. All our money, we're going to have to invest in this country, so we should get. And plus, we're going to be employing your people, right? But now, mining still exists, no question, and it's going to keep existing. But the world is now a digital world. Let's take a company like, say, Meta. Okay, now what they're doing is they are, and I don't, fully understand all this stuff, but I kind of get that what they're making their money somehow or other by providing a platform for person A to interact with person or something like this. But in any case, the point is this, that they're running a business in India, making use of the purchasing power of all these residents of India, by the way, which is over 1 billion people. Think of it, okay? Meta is accessing the population of a country with a population of 1 billion people. All right? Guess what their position is on the profits they make? Their position is, should India be able to tax that? No, because Meta doesn't have a permanent establishment. You got the picture?
Oh, okay.
Now, so that's that's a bit of an interesting issue, isn't it? In other words, does it make sense 100 years later for a company like Meta or Google or all of these digital, services companies, probably Airbnb, all these damn things, Uber, I think they all probably operate under the same principles, right? Okay. Should they be able to essentially say, imagine you're having a party of 50 of your close friends. Okay, you're just inviting them over. You're having a party. All of a sudden, somebody knocks on the door and says, I knew I'd find 50 wealthy people in this room. I want to market to them, right? Pause the party. I want to market to them. Okay, I want to make some money off your gathering. I want to make some money off your population, right? So, countries like India and others are obviously not convinced that they should have no taxing rights to all the money that Meta is making by accessing their population in their country, right? In their country. Yes?
Yeah.
Now I'm just kind of curious. A moment ago, you told me that even 100 years ago, you thought that the host country ought to be able to tax that money. I assume your position would be that obviously India ought to be able to tax profits made by accessing the population in the country. Agreed?
Yeah. That's kind of weird
Okay. So now that is part of what's going on here. Now, because the standard treaty prohibits the Metas of the world from taxing these profits because of the permanent establishment clause, countries had the bright idea of, well, all right, I guess we better make up a new kind of tax, and we're going to call it the digital services tax. Right? So they say, well, we may not be able to tax the profits, but we're going to go outside the tax treaty, and we're just going to enact a new tax called a digital services tax. Say, buddy, you know what? Sure, come on into our country, but you're going to have to pay, what is it, 2%, 3%, whatever the figure is, of your revenue if you want to sell to our customers. That's what a digital services tax is, right? Now, I'm just kind of curious. What is your view of that? Do you think that's unfair? Do you think it's? I'll tip my hand. I don't think there's anything unfair about it at all. I think it's totally reasonable. The government of Canada, the government of India, they pay for this population, they educate them, they give them the purchasing power, if you will, to buy these products. So what, you're telling me that somehow they can't share in the profits? I think it's completely out of sync with the world we're living in the 21st century. But guess who doesn't think it's out of sync? Guess who's discriminatory?
Yeah. Well, John, I want to you shared it. I want to share with you. You share with me some posts here, and I think this is. I want to just share this with everybody right here now. Here, this right here. This was something that basically, I'm not sure who this comment was from, but this is I saw this. And this move received virtually no attention because it was slipped into a broader executive order on trade. Unless you're intimately familiar with the tax code, you might not have noticed his invocation of obscure 1934 law, 1954. I think that's a typo. That has never.
It may have been a 34 law that was incorporated into the 55 tax code.
Okay.
So maybe 34.
Yeah, it could be, but the fact it was never used before. We know that.
Yeah, that's right.
Yeah, we know that. That's true. Which says the president can double taxes on all citizens and companies from any country that the president has declared has levied discriminatory taxes against Americans. But that's actually no. That's not even true. Discriminatory or extraterritorial. It could be one or the other.
Well, the extraterritorial is a different thing. We'll get to that in a minute. But let's just stick with the digital services tax. The U.S. regards them as discriminatory. Why? Because in effect, right, the effect of them is that they apply disproportionately to American companies. But, that's kind of because, the U.S. has the biggest companies in that area, right?
Yeah.
To make it even worse, right, the U.S. position would be that a U.S. company shouldn't be subject to this tax, even when a Canadian company is under Canada's laws. In other words, what they're really saying is that U.S. companies ought to have preferential tax treatment from the Canadian government. It's unbelievable.
Yeah, and I guess this is what people are afraid of here. Some speculate that he'll employ it against people from the European Union and other countries that have agreed to global minimum tax on multinational corporations.
That's a different kind of tax. We'll get to that. This is the article from Catherine Rempel in the Washington Post. It's a good article, but it doesn't distinguish between the two different kinds of taxes very well.
Okay. And then this is just, to be clear, this agreement was brokered by the United States, which it was.
Oh, absolutely. This has its origins in the Biden administration. Right? The Biden administration was upset that countries like Ireland were running a 10% corporate tax rate and undercutting them. They were upset. So what they said is that we want the world to come together to have a minimum corporate tax rate of 15%. And then after the rest of the world agreed to it, they said they won't adopt it. So in other words, what they're doing actually is trying to get an advantage, a U.S. advantage that the rest of the world doesn't have, to a policy that the U.S. got the ball rolling on. You cannot make this up.
This is amazing. This is amazing. And I guess, and I think this might be a point. It's like, what, is this just, is this just a bluff by Trump, or is he going to do something with it? This is just a negotiating thing, a negotiating tool. Because, this is the truth, though. But his executive order could empower him to double taxes on every random, anyone, any British, Japanese, or Canadian national, and Americans who have dual citizenship.
Well, that was the point I was trying to make at the beginning. Okay. I don't think that people are reading this law properly. I don't think they really sat down and read it and thought about what it actually says.
Hey, John, we're getting a lot of questions backed up. You have a good time to start taking some questions now? All right, we'll go there. All right, thanks, everyone. Yeah, this is something else here. All right, let's see what we got for questions here. All right. Yeah. There we go. Here it is. This is a good one. And it is. Here we go. It is written in fiction. Natalie, we're confused too, right? And I think this is it. It sounds like works of fiction. Oh, Rob B is asking, what's the definition of individual? Thank you for that. And I want to show you something.
An individual is any carbon life form on the planet, obviously, and beyond.
Right. Yeah. And Rob, what John and I discussed before is that the United States of America, through its regulations, can make any organic life form, or maybe non-organic, a tax person. The code allows anyone. The code allows that to happen. So I just want to show you a screenshot, because this is a whole line of thought that that John really helped me with. So this is really kind of goes to what my one of my points is, because the regulations, create the definition of individual, because the law doesn't define it. So it's so bad. And this is really, I got to thank John for this one. This video has gotten this video has gotten 702,000 views. It's my most popular video. And I really want to thank John for it, because he's the one who got me thinking about it. Like, look, these regulations are defining everything. And so when the regulations define individual, well, they can also define, they can put other requirements in there, such as an individual, somebody who consents to the law. consent's required. Yeah.
Individual, is it in 891? Go back to 891 again.
Okay.
Because I mean, you're right, but I don't know how that applies to. Let's see. Hang on a minute. Citizens are subject.
Oh yeah.
No, it doesn't talk about individuals. It talks about citizens or corporations. Okay, that's a different. That's a different.
Yeah.
Okay, go back. I mean, you're right in terms of what you're saying, Anthony, but I don't think it applies to this.
Okay. Yeah.
Anyway, next. Yeah, let's go
All right.
back to what we're talking. The questions and that. But
Okay.
I would leave the law on the screen while we're getting questions.
Okay, great.
Yeah.
All right. Yeah. Let's see here. So let's see. We got to. What about tax for American goods they buy? So let's think about this one. Truth Matters. Thanks so much for that one. What about taxes Canada charges Americans for our few goods they buy? I'm not sure.
I don't understand the question.
Yeah, you mean sales tax? I guess.
Question in somewhat more detail. Okay.
Yeah, yeah. Oh, here, hold on.
Then come back.
All right. Oh, here it is. I think this is what it is. Okay. Canada and Mexico stole our auto industry. Plus, they make car parts, which cars our cars prices to skyrocket. Okay.
Yeah. So this is under the this would be under the NAFTA thing originally. That may very well be true. That may very well be true.
Yeah.
But I mean, first of all, I mean, that was an agreement. I mean, it was the Clinton administration, basically, I think, that got the ball rolling on that. So I think that most of your IRC or Trump girls should go towards the Democrats. Okay, by the way, on this, they've been the promoters of these free trade agreements. Trump in 2017 signed on to something very, very similar, right? So that's a trade agreement that, the NAFTA stuff is not quite what we're talking about in this particular case, right? But I certainly take your point that these free trade agreements have been extremely disruptive and damaging to a lot of American individuals. No question about it.
Yeah, and and I would say, look at the beneficiaries of it, and that who benefits from the system, and it's not the people, right? I think that's the issue that we have.
Well, there's an awful lot of people. I mean, most of what I hear about is in the United States, for sure. Okay, quite possibly Mexico and Canada as well, possibly. But I do agree that NAFTA and the new thing have been very, very damaging to certain groups of Americans, right? Who worked in those industries, and that is, I think, part of the reason for Trump's success, right? The recognition and acknowledgement of that. But this is a completely different issue from, although important issue, but it's a completely different issue from what we're talking about on this today. Yeah.
Thank you very much, Truth Matters, for joining us today on that. But yeah, it's a big issue, and I think there is some interrelation between it, because these the tax codes don't benefit the people, but some people are benefited, right? We know that some people benefit. Doesn't seem to be a lot of us. Great comment from Suzanne this morning. Good morning, Suzanne. Thanks for joining us. Right, and this is so true. Beautifully stated, Suzanne. They purposely word the code to create confusion, so whenever challenged, they can say, "Oh no, it means this." So even when before courts, nobody is certain what's correct, right? Nobody even knows what's correct. Absolutely here.
I don't know. I don't find this section confusing at all. I mean, I think I understand exactly what it's saying. I think that what's happening is that so far the people writing commentary about this are not reading it closely.
Oh, all right. Yeah, you got a point. Hey, no, so essentially, John, what you're saying is like, no, 891 is very easy to understand. It's terrible. And people don't want to admit to how terrible it is, maybe. That could be it. But Suzanne, thank you for this one, because this is sort of the one. And for those not informed about it, United Fruit Company, Chiquita, they really are, the things they did are well known. And, that word banana republic, that isn't necessarily a derogatory word to say the countries that became banana republics, but in my viewpoint, that's a derogatory term on the United States government, because it's the United States government that interferes on behalf of the United Fruit Company to create that population that will do their dirty work. So I think that's really, if you're not informed about how it works, look into the United Fruit Company and their hate to say it, a lot of CIA connections, and they've done a lot of things around the world there to overthrow unfriendly governments.
Yeah, what's interesting here, Anthony, is that the comments here seem to be focused more on trade, right, than taxation. It's interesting that, obviously the context overlaps. I want to remind people that we're talking specifically about a tax provision at the moment, which is independent of the trade, although they can talk about the same thing sometimes. There's no question that the U.S. uses economic power and other kinds of power, to reinforce its trade interests, right? There's no question about it, of which the tax thing is very much a part of that.
Right on. And here's a comment from Rob B. So ambiguity, just sort of back to Suzanne's comment, and let's just say that this maybe isn't the most ambiguous one, but there is some ambiguity about how it exactly would work out, and there's no regulations. And I would say this comment's pretty true. It's like the ambiguity allows this. It allows regulations divorced from the law. That's what it allows. And something I was just thinking about is like, well, we have this whole headless branch of government called the administrative state. The administrative state takes a law that's passed by Congress, signed into law by the president, and takes it's like, okay, now we're going to make this law actually put some meat to it. Here's the regulations to effectuate the purpose of this law. No one ever goes and votes on those regulations, but wouldn't it be an easy fix to this entire regulatory state to say, hey, look, any regulations developed by any agency, they have to get final approval by Congress. Congress has to vote for those regulations because those regulations have the effect of law, that Congress has to vote on those final regulations, and therefore Congress has to be accountable, because right now, the way that they don't have to be accountable because, like, oh no, we didn't pass that law, we passed this law, right? But they took that law to mean this. Yeah, well, what are you going to do? So
they don't understand the laws, and they can't understand the laws,
right?
That's the reason for the delegation,
right? And I mean that sort of, and my argument is so naive too, because they don't even read the laws. They don't read the laws as it is now. But just to see the point, like there's no like we don't have we have no representation in Washington D.C. because they don't read the laws that they're supposed to represent. So we don't have a Republican form of government, and everyone knows that. Everyone knows that we don't expect them to read it. It's too complicated. So there we are. Borchell, good morning, Borchell, to you. Digital tax, get John worked up. Yeah.
Not worked up at all, actually.
Not worked up.
Not a bit.
Yeah, right.
No, just commenting on what's going on here. It's funny. When I was maybe in grade 7 or 8, I remember telling, maybe it was the teacher, that in this day and age, history didn't matter. Well, obviously that was one of the many stupid things I've said in my life, because I think that the digital tax issue can be understood only in terms of the history of tax treaties and that sort of stuff, right?
Well, maybe we have something, digital, maybe a podcast on that later on.
Yeah, sure. Yeah, absolutely. Yeah.
No. All right, great. Another comment from Cheese Mouse. Well, I would just say this, technically, it's all unlawful. Code and regulations are never law. Well, the code actually is the law. That's 26 USC. In all those sections. So that the tax code is a law, but the regulations are often further define it, and so oftentimes can undermine the law. So that's just a little bit here. And the Chevron deference, which hopefully we'll see an end to that with Loper Bright being passed last year. Hopefully we'll see an end to that, and certainly.
A very interesting example of that. We in one of our more recent podcasts, we talked about the new covered gifts rules, under Section 2801. 190. Well, it's actually the actual text of the regulations, only I think 60 pages, but 60 pages of regulations governing one section in the Internal Revenue Code. There's stuff in there that I think are arguably is going to a reinterpretation of what that code section says. But anyway.
All right. Well, fantastic. All right. Well, this is, I'm just trying to see if there's anything else we needed to get to on this, but This is certainly so. My take. Like I'll go over my takeaways from this. Number one, tax code is we see how weaponized the tax code is. Number one, it has been for a while, and the U.S. government claims far more powers than people realize. And this all might be just a regular, and this also might just be a negotiation technique. Those are sort of my 4 takeaways from this. What about you, John?
My takeaway from this is that really what's going on is the U.S. government is trying to reinforce the interpretation and a tax treaty that's from the 1920s. And the reason is that historically, in the golden days of America, the U.S. benefited from that. And, this whole thing, the digital services taxes are really the result of the these tax treaties 100 years ago, and the U.S. pulling out of the Pillar 1, Pillar 2 negotiations, which they've done clearly under Trump's executive order, means that the U.S. is trying to enforce the world order from 100 years ago. And unfortunately, the world has changed. And I think what we're going to see, over the next decade or so is the rest of the world realizing that there's no way to interact with the United States anymore in terms of a 21st century reality. And I think that you're going to see, a gradual, sort of pulling away from it to the extent that they can. But, tax treaties, FATCA, citizenship taxation, I think these things need to be properly understood as silent 24/7 sanctions against the rest of the world. Okay, I mean, they're always there. And then sometimes, they'll impose additional sanctions. Now, final thing I would suggest is this. Thinking about this, why would the rest of the world go along with this? Partly they don't understand it, I think, but partly because, the U.S. has a large consumer market. And people want access to it. I remember in Canada in the early 90s, late 80s, when the discussion of NAFTA began, there was a lot of opposition in Canada, as there was in the United States, to a free trade agreement between Canada and the United States. But Prime Minister Mulroney, the Prime Minister at the time, justified it. He didn't call it free trade because he knew that was, something people didn't like. He called it, you ready for this, secured access to the U.S. market, secured access to the U.S. consumer market. And I think that was what, quelled some of the discontent over it. But, when you look at this whole situation with the United States, it's a concern about access to the U.S. market, which means largely the consumer market. But, the way the rest of the world is growing, countries in Africa, India, and that, I think that's going to become less and less important. But also, even if it is important, I think that, countries are going to have to start asking themselves, is the access worth the price of admission? Being subject to all these horrible rules. So we'll have to see. I certainly wouldn't expect any immediate pushback on this. So people will say, oh, this is a good idea, but I don't think it's a good idea. Okay. Because I think in the long run, I'm rightly or wrongly, I'm, one of those believers in the saying, all boats, what is it? Something about a rising tide.
Yeah.
I don't think that this should be, seen as sort of a zero-sum game. But in any case, it's interesting.
We're seeing our renunciation work pick up, John. So I think there's a lot of we are seeing it. So which is a great way to. But if you are thinking of renouncing, and this is a great way. So John, thank you so much for your analysis on this. Really something hard to dig into, hard to dig deep into, and it's sort of, I guess, the one thing that wasn't is sort of the rank hypocrisy of the United States of America, like the world's worst tax bully, the world's worst bully, is quick to complain when they're seeing a perceived slight from other countries who dare tax almost as horrifically as the United States. Like, they're not even taxed as bad as the United States government is, but you're thinking about it, aren't you? You're thinking about taxing us as terrible. We're not going to let it happen because we're the United States of America. That's
well, we didn't even talk about the undertaxed profit rules today. Maybe we should talk about that next time. What a big part of the complaint, from the Republicans has been. And I mean, I understand the point of view, but I really got to say that, if the United States feels that it's wrong for other countries to impose, their taxation on U.S. companies, I really think that the United States has got to stop imposing U.S. taxation on individuals who don't live in the United States on profits not earned in the United States. It's the pot calling the kettle black. It's extraordinary.
Extraordinary. Yeah, there you go. Well, if you had enough of extraordinary in the United States and you're thinking about renouncing your citizenship, you can do no better than going to John Richardson. Here's his email, citizenshipsolutions@protonmail.com. And if you have a complicated renunciation, John's fantastic. And by the way, if you are looking to support this channel, doesn't help if you're looking for tax prep. We do incredible tax prep. You can go to IRSMedic.com/prep, book a time to speak with us about your tax preparation needs. We really have a wonderful, wonderful department. Mike Malott, CPA, is running it, and he's doing such a great job. He's been working for me for 2 years. Thank you, Lord, because we really have a tax department that's moving along things quickly. So if you want to have highest level of tax return prep, just go to IRSMedic.com/prep. Love to help you out. And also for Keith Redmond, just want to give him a shout out. He was on quickly today. Again, if you want to reach out to him, you can find him on Facebook here. And also, if you want to send him an email about your particular situation, where is his email? Right here. You can send an email to him. So with that, I think we're going to conclude here. This is Anthony Parent for IRSMedic, John Richardson, and Keith Redmond. Thanks so much. Here, by the way, I'll end with this one here. Go there and get your tax returns done. Thanks so much for watching. We'll see you next time.